Did you see AMD's latest earnings? $7.7 billion, up 32%. But wait, the stock still dropped 6%. Supermicro? Down 20%. When you're priced for perfection, even good news can sting. What does this mean for investors? Stick around to find out why expectations can overshadow earnings.
Moving forward, fourth thing for this week's version, we're talking AMD, SMCI, Supermicro. Gary, both delivered, AMD delivered strong growth, a little bit of declining growth on the SMCI side, but really the point of the thing here is AMD and SMCI get hit by strong expectations, right? So the expectations of what these stocks need to deliver continue to ramp up and up and up. Gary, thing number 4, what do we need to know?
Yeah, Rob. So it's important to understand that stocks will often trade based on how their earnings compare to expectations. So the expectations for AMD were sky high. To give you a sense of that, AMD shares had been up 80% in the 3 months prior to announcing their second quarter earnings, and they delivered strong second quarter results. Revenue was $7.7 billion. That's up 32% year over year. Earnings per share of 48 cents were in line with expectations. So the stock still fell by 6% the next day due to extremely high investor expectations. And people might say, well, wait a minute, they had 32% revenue growth. They met their earnings expectation. What happened? The answer is people were expecting something bigger. That's why their stock had been up so much. But the stock dropped 6% and then mostly recovered the next day. This was just a small dent in the recent rally. Supermicro, on the other hand, completely different story. Their post-earnings decrease was even more dramatic. The shares dropped almost 20% on the day. Revenue grew, but at a decelerating rate. This is like the corporate version of disinflation, right? You had growth, but less growth than you had before. They also had, this is a company that had soaring sales during the initial AI infrastructure boom, but things are slowing down there. Momentum is cooling, and that caused revenue to miss optimistic analyst forecasts. And when you're a high multiple stock, when you're a stock that's gone up an enormous amount and you miss forecasts, your stock's going to get hammered. That's exactly what happened. Making things worse, it wasn't just a bad quarter for Supermicro. Their forward guidance suggests a slower growth rate going forward, and people are really responding to that.
Yeah, Gary, I mean, what was the biggest thing just in terms of the difference with the way these two stocks reacted, right? I mean, completely opposite directions. I mean, what was the biggest reason for why that happened?
So the big deal, Rob, is that AMD actually had a good quarter. They just didn't crush expectations. And 32% revenue growth, they had earnings growth. They really just got clipped a tiny bit by the fact that their stock had been up 80% over 3 months. And, there's only so much you're going to be able to get out of any one stock. But they had a good quarter. Supermicro, it's a completely different story. Wall Street loves companies with accelerating growth rates, and the stock skyrocketed over the last few years. But the expectations were really high, and the growth was slowing. And slowing growth and a high multiple don't go together. And so that's really what happened there. They, in particular, Supermicro worried investors with guidance suggesting that the slowing growth rate isn't a one-quarter issue. That's really the key thing. If they would have given stronger guidance, the stock wouldn't have been down so much. But then again, if they would have given stronger guidance, they probably would have missed next quarter.
Yeah. Great coverage there, Gary, and covering just what these big players are doing, but also how that market's affecting one way or the other, and playing in the same space. So great breakdown there. This is this week's version of the 5 things. Head over to deepknowledgeinvesting.com. Check out options for free premium subscription. You can also subscribe to all of our different socials, channels, YouTube as well. Break this up into tons of different shorts, bite-sized material, as well as individual things throughout the week that will get rolled out on that channel if you'd like to subscribe. Gary, we're going to close it out with our educational topic this week. We're talking about trailing versus fixed stop losses. So again, we want to make sure we educate our audience, give back in terms of, Gary, your knowledge, information, and really building an investor pool, not only for people our age, your age, Gary, but also younger generation too. We're seeing a lot of good interest in them wanting to learn more and more about the markets and how they work. I actually saw a study the other day that it was a big number that asked, what's your best potential path to achieving the life that you want from a financial perspective. And I was talking Gen Z, and it was actually a huge percentage said investing was their number one opportunity, right? Not a good job, not college degree, investing, right? And I think it's true. I think it's true, and the data is out there. So I'll let you comment on that. Yeah, go ahead.
First of all, good for them. Rob, when you started that, I was terrified you were going to say their best path to growth was being a social media influencer, which I really thought you were going to say
that might have been number one, and then investing number two, but that's all right. We'll take that number two position. Or I guess it could be good for me on both sides. But anyways, I digress.
You
thing number 5, Gary.
Let me add something here, because it's an important. I think it's phenomenal that we have so many young people interested. Our young interns really do a great job on the finance side. We just added a new subscriber a week ago from our YouTube channel. Young guy who's looking to build wealth over decades. Good for him. That's phenomenal. He's actually helping his dad with some things, which I think is incredible. And for those of you who are still students, we offer a huge discount for students. Just show us documentation that you're a student. We'll give you the code. We're really excited about the ability to help young people start to build long-term wealth.
Yeah, no doubt. And if you're out there, you're a student, we also have plenty of discounts for you also. So please, again, just reach out via our website, get you some codes over there for discounted subscriptions to the platform.